Hey everybody, happy Thursday, May 8th. It's a little after 9 a.m. on the West Coast, and it's time for another market update. The big news of the week was the Fed concluded their most recent meeting, and as expected, they did not make any change to their Fed fund rates. But going back to last Friday, we got something that went into probably the Fed's decision was the big April BLS jobs report. And as has been common over the last couple of years, it's strong at first glance, but when you take a closer look, it's not as strong as you would think. So the first thing was the headline number, the thing everybody reacts to was that there was 177,000 jobs created. The markets expected more, about 130 to 140,000 jobs. So that was a negative. Stronger the job market looks, the less likely it is that the Fed will cut their rates. Monthly unemployment stayed as is, so 4.2%. So didn't hurt us or didn't help us there. But as has been very common, like we've talked about, they made some negative revisions to the February and March numbers by 58,000 jobs. So now every month so far this year in 2025, they've made negative revisions: January, February, March. Also, last year they did that quite often. So it's not too much of a stretch to think that this 177,000 jobs created will also be negatively revised over the next couple months and will be a lot lower than initially was reported. But the markets are going to react to this number. The markets did not react very well because it kind of flipped the narrative. The narrative going into this was, hey, economy is in trouble, GDP is going to be negative, all that kind of stuff. Fed maybe is going to have to cut rates if the economy's slowing down. But with this number coming out a little stronger, the narrative flipped to economy's doing better than we thought. Maybe Fed doesn't have to do anything because employment looks strong. So that wasn't necessarily the best one for us, but like I said, there's a good, good chance that they're going to negatively revise this in the future. We just won't get the same kind of pop that we would have if it came out lower to begin with. Next thing, like I said, the big thing this week was the Fed concluded their two-day meeting. Like I said, everybody knew that they weren't going to cut rates. That was basically locked in, already priced into the markets. The thing that the markets pay attention to afterwards is they release a statement, and then Chairman Powell has a press conference. And really, the thing that happened a lot was I think he said the word waiting 22 times during his press conference because really the Fed doesn't know what to do. At this point, the Fed doesn't have enough data to make a decision. They kind of brought up the word stagflation. Stagflation is where there is high unemployment, high inflation, and slow economic growth. Really, it's the worst case scenario for our economy, and it's something that really hasn't happened since the 70s, and there's quite a bit of back then. So that the Fed is worried about that. They have a dual mandate with Congress. They have two different things they're supposed to do. One is price stability, which is basically keep inflation down, and the other one is involved, basically keeping employment strong, keeping the economy strong. So the way the Fed works is that when they cut rates, that stimulates the economy. People do more stuff, they hire more people, things like that. That's going to stimulate growth. When they raise rates, that's to fight inflation. People are spending too much money, the economy's overcooked, and they're going to raise rates to slow the economy down. Right now, they're basically worried that whatever they do, they don't have enough data to make the decision, with all the tariff stuff going on and all and stuff like that. So right now they think there's some, risk to both sides, where if they, cut rates too soon, then that could create inflation, especially with tariffs, gonna start hitting these numbers soon. Whereas if they wait too long and the tariffs cause, a bunch of unemployment, then we can go into a recession. So, they're kind of caught in that, between a rock and a hard place. Really it's going to come down to data, these inflation reports, these jobs reports over the next couple months, what they do. But really, like I said, the word that was used over and over again 22 times was the word waiting. So they're waiting to see what happens, just like the rest of us, just like the markets are. So that was what came out of that meeting. So right now, no change. Right now, the markets have a 20% chance they cut at their next meeting. Initial jobless claims. So initial jobless claims came out today. This obviously is important because it has to do with employment, and the more people filing for unemployment, the worse our economy looks like it's doing. And this came in again a pretty low number, 228,000. Last week it was at 241, so kind of jumped a little bit. The estimate this week was somewhere between 230 and 240, so it came in under that number. So again, on the surface, the Fed could look at this and this jobs report and say the economy is great. Where does that leave us? So the average 30-year conventional this week is right about 6.87. Last week we are at 6.83. It jumped to about 6.9 or so early in the week and came down a little bit and then went up a little bit today with the news of actually a trade deal, it sounds like, between the UK and the United States, which is great to hear, but that's created a little bit of a pop in the stock market, in crypto, and a little bit of money leaving the bond market, which kind of negatively affects our stuff. Next thing, so important dates. So upcoming, like I said, the data and the Fed is waiting to see these things. So the more data that kind of comes in our favor, the better chance we're going to see rates come down. So what we got on the horizon is we got the CPI inflation report on May 13th. So that's next week. End of May, we get another PCE inflation report. Then we get another BLS jobs report like this one. We get the one for May, at the beginning of June, and then we'll probably get another CPI report right before the Fed meets and then announces their decision on June 18th. Like I said, right now, 20% chance they cut, 80% chance they do nothing, but it's all going to come down to that data. So tariffs obviously can make a big difference. A bunch of trade deals get announced. That could obviously change these things. If we see some really low inflation numbers, we see some unemployment start ticking up, that can maybe make it so that they'll cut rates earlier. But right now, just like the rest of us, the Fed is kind of waiting to see what happens with all this tariff stuff. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, I hope you have a great week, guys. Thanks.